Hello, my name is Rolly Vincent. I'm the creator and director of JETNET IQ. I've been working with JETNET in partnership with JETNET for the last 10 years. We're delighted today to bring to you our latest state of the market briefing. We've been doing these briefings at eBACE, at ABACE, and at BACE in the US as well for many years. And I think this is our 7th or 8th year of doing it now at NBAA. Today, of course, we're not meeting in Las Vegas or Orlando. We're meeting virtually. So congratulating NBAA and all of the organizing work that's been going on. Ed Bolin, Doug, Chris, the whole team at NBAA is doing a great job bringing us all together virtually today. So we thank you for joining us. The presentation that you're going to see here will be available for you. Just email me and there'll be the email address here in a few minutes just to share with you. So that if you would like a copy, just email me and we'll get that out to you right away. So if you miss a number or two or a comment, we're also going to be recording this, this press conference for the next 45 minutes or so. We're going to present to you really results, real data. We're data people, as you probably know, the analytics and the results and the sort of the forecast that we see. We're going to share all of that with you. And of course, be open to your questions towards the latter half of our presentation. If you haven't already, please mute your microphones. That'll just help for the presentation purposes. We'll bring you back off of mute in a few minutes as we go into the Q&A. But if you can, just look for your control panel. Just click on mute. That way it'll be a little clearer for everybody on the call. So again, if you haven't met me, my name is Rolly Vincent. I've been working in the industry in aviation for my entire career. 37 or 8 years now, and for the last 25 years, really focused on business aviation. So look forward to sharing with you the results. And again, if you've missed anything as we go through, this presentation will be available for you. As we begin, though, I'd like to just take a minute to be very thoughtful of where we are and what we've been facing with the COVID-19 pandemic. It's affected everybody we know, whether through health or loss of life, loss of income, loss of job, just loss of freedom. And here in business aviation, we've actually, and we'll talk about this, we've actually been feeling a little bit more optimistic lately about where things are. Our industry is doing much better than many other industries, and for that we're thankful, but we're also mindful of all of the others, industries, individuals, and those within our community who have been suffering through this pandemic. The news of the vaccine, and we're going to focus on that here in a few minutes. The news of the vaccine developments, I think, is really showing up in the results of the surveys that we have of the owner-operator community. I'm really hopeful of some good news there. So let's really just move into the presentation. Just a quick outline. I'll speak for a few minutes, then we're going to open it up for Q&A. So if you do have some questions, you can see our chat room should be open. You can actually type in your question. That'll sequence your questions and we'll get to them. Hopefully you're seeing now the outline of the presentation. The outline, this is a pretty typical outline for us in this type of press conference where we share with you really thoughts on where we are and looking at it really from the 4 pillars. The economy, our industry, of course, the survey results. And if you're not aware, JETNET IQ has been doing owner-operator surveys for the last 10 years. We now have over 20,000 people, 20,000 respondents, all of whom own or operate a business aircraft, fixed-wing turbine worldwide. And that's an impressive number. We're gathering 500 new respondents every 90 days, and we'll share with you the results. And then our forecast. We are probably one of the premier forecasters, just given all the work and all of the insights that we have, we bring all of that together and share that with you and our clients. And we've been lauded for actually our accuracy in our forecasting. As I said, JETNET IQ has been going on now it's our 10th year. We just missed meeting together face-to-face in New York. We usually gather once a year at our summit. We didn't do that this June, of course, because of the pandemic. We'll look forward to doing that next year. Okay, a little bit of data. We're going to hear a little bit of data in this presentation. I hope you're ready for it. We always talk about first the economy, the economic environment in which we're operating. This is fundamental. The US is 60% of our industry in terms of where the aircraft are based. So we do look a lot at the US. The good news is the GDP forecast, the economic growth forecast, if you like, for the year, it's just been revised to a -3.8. It had been hovering around -5 or -6 for the year. Latest forecast from the economist just came out a few days ago, -3.8. So that, if there's any good news here, that is some good news. China is the only major country with business aircraft based there that actually is expected to grow this year, but only 1.8% or so. And that's been hovering around 1 to 2% for most of the last 6 to 8 months. So not a lot of economic growth, and underlying our forecasts, as you'll see, is this fact that we're really in this sort of doldrum period. We have seen a worldwide recession, depression almost in some areas, and we're hoping and seeing good news coming out of all of that. The Dow Jones, and any of the stock markets in the US have actually been very positive indicators of both sentiment and growth potential. A little bit less so, of course, in Europe. Europe and the US in particular are on different trajectories, both in terms of sentiment, but also in terms of economic activity. The pandemic, of course, is now in its second or third, or I don't know how many waves now, but it looks like the third wave in some areas upwards. Here in the US, where I'm sitting this morning, the pandemic is real, it's everywhere, and people are taking it seriously. In terms of consumer sentiment, you see some of the bubbles here up in front of you. Those are some pretty good numbers, depending on where you sit and what part of the economy you're in. If you're in a service industry, which requires a lot of face-to-face contact, that's a tough part of anybody's economy or economic sector right now. Other areas are doing better, though, some of the service areas in particular. In Europe, again, the sentiment is really, it's kind of diminished. We'll be watching for some better developments there going forward. PMI, the Purchasing Manager Index, actually looking pretty positive, which is, again, a pretty nice piece of information to know. Let's focus a little bit now on the industry itself, our business aviation industry. And for us, that really, for JETNET IQ, it's fixed wing and turbine. That's really our focus. We do look at other parts of aviation, both commercial and rotary wing and piston as well, certainly the training arena. But our focus in IQ, in JETNET IQ, is fixed wing turbines. There's around 38,000 of these aircraft that are tracked in the JETNET system. Our researcher team in Utica, New York, mostly in Utica, New York, upstate New York, they're updating this database on an hourly basis, and it is really at the core and the backbone of all of the information and insights that you're going to see. Our researcher team in Utica, primarily in Utica, is very good at what they do, and they also bring to us really the response rates that we love to see in our surveys. We get amazing response rates. People are interested in what we're doing, and we do nothing untowards with the data. We always respect the individuals who are responding in their organizations, and we keep that fresh. Our industry, what are some of the big things that are going on in our industry? You see some of the things here. We've been reporting, as others have as well, on business jet cycles. You know, you hear one number for cycles, that's never the right thing. You always need to think of multiple layers of our industry. So Part 91, the private operations, that's still pretty tough. That's down 32 points year over year in terms of cycles, at least in October, some pretty recent data. But if you look at some of the other areas, whether it's charter, the so-called Part 135, or Part 91K fractional program holders, that activity level has really rebounded. In fact, I would challenge any industry to look at numbers like this and to have performance numbers like this. So we're pretty much flat year over year in those sectors. But of course, with the challenging April-May timeframe, when we finalize the year, we still think we're going to be down probably something close to 25 points on overall flight operations. Now, a cycle, that's a takeoff and a landing. That's what we're looking at here. Transactions, that's really interesting. We look at pre-owned transactions and, of course, new deliveries. That's the new factory work as well. And you can see some really interesting dynamics. And I think some of the things to point out there is really the relative strength of our industry. Whether it's considering the volume of transactions or days on market, things like this. Prices have been a little softer this year, and I think that's the general consensus. And that's not surprising. A lot of companies have pulled back their CapEx, their capital expenditure spending, and they're just being prudent with cash. So no big surprise there. But frankly, if you look at some of the latest numbers towards the last couple of months in particular, transaction activity has actually been quite robust. And I would challenge any industry to have numbers as strong as ours. So that's really good. If you look at transactions through the beginning of this year, let's say January 1 through the end of September. That the data has settled down now. We have all of that data is recorded. Those transactions looking at this year versus last, down about 7.7%. Again, not bad considering all the hell that we've been through. Business aircraft deliveries are going to be off pretty significantly this year. We've been saying 25 to 30%, depends on the sector. And some OEMs are going to do much better than that, by the way. And if you want to know who they are, just give us a ring. Okay, here, let's look at some more data. This is a chart that we've shared before at press conferences for eBACE and BACE and ABACE and everywhere else. But in particular, this looks at the US economy and the US flight activity. The green bars really reflect the size of the US economy. And if we say, I'm going to try to point here, you see this time frame here. This is when the US economy last shrunk, if you like. You see the reaction in 2008 to 2009. So the green bars, that's the GDP. And look at this, we've had steady growth, around 10 years of steady growth since that time. And this year we're expecting this fall off. It's been about 6% drop. Now it looks like closer to 4% drop. Now, what's the impact that that's going to have on flight operations, for example? And that's really what these blue lines are. It's the blue line. Last time we had a recession or crisis like this, back in started in the end of 07, beginning of 08, and then right through 09, we had a pretty impressive drop off in flight activity. Okay, this business jet cycles. We're seeing the same sort of thing so far this year. We think we're going to end up somewhere above 3.6 million flight cycles this year, but that's off, you know, give it 20 to 25 points off of where we've been. Now, again, not surprising, these things tend to bounce back pretty quickly. And in fact, we're already starting to see that in the data. The other interesting thing to point out is really the fleet. The fleet has been growing pretty steadily in the US. This is US data. You have to sort of look at this a little bit. Flights per aircraft are off pretty sharply. And that's putting some, I guess, how shall I say, we're being a little bit cautious in our outlook because of all of this excess capacity when you have flight activity levels not growing really over time. We can talk about that in the Q&A. Here's some more data. Again, we're going to share with you data and insights. This is one way to look at the markets. This is pre-owned. Now, the nice thing about pre-owned, one of the many things about pre-owned, the activity levels 3.5, 4.5 times the number of airplanes are exchanging hands. This is a retail transaction, either a sale or a lease of a whole airplane. And we're looking at this over time. And you see the lines here, the blue line, I'm going to point it out with my mouse here. The blue lines, this is the number of transactions, number of sales, so-called retail sales and leases of aircraft. And if you go back in time, not very far, 2018, when I guess our buoyancy, our sentiment in our industry was strongest, and you'll see that in a minute. We were at just under 3,000 transactions. That's a pre-owned business jet exchanging hands to a retail user, an end user. Since that time, as you know, we've had some drop off. Last year was already reduced activity in terms of sales of pre-owned airplanes. And this year so far, it's tracking, as you see here with the numbers. So not as strong a year as we've had in the past, but still, relatively speaking, not bad. Pretty good performance. The red is the number of aircraft that are listed on JETNET in the JETNET system for sale. As you may know, JETNET offers this service free of charge to the community, meaning that if they want to list their aircraft on JETNET and get the exposure that provides them globally, that's a service that's provided. And so these are, I'd say, highly accurate numbers. Around 2,100 jets currently, or at least at the end of October, were on the market for sale. And you see these lines coming together as we've seen them come together in the past. As the market really is working well, we're not seeing any real rush of inventory. I think that's been the big story of this year, you know, even though we've had all of this crazy economic and health and other concerns, you know, inventory is still hovering at around what, 9.4% of the fleets for sale. That's actually down a little bit. It was at around 10, a little over 10% a few months ago. So if you go back to inventory back here in the last crisis that we had, the financial crisis of 08, 09, inventory spiked at around 18% of the market. We're nowhere near that. So that's helping our confidence and building our confidence in the activity and also the level of activity, but also our go forward numbers. Here's the new aircraft deliveries coming out of the factories. This is the primary manufacturers. There's a few others, of course, that are not on the chart. But just to share with you some of the activity level we're seeing in our forecast, our latest forecast for the year end. We think we'll be down around 29%. I think those numbers. We're seeing pretty decent levels of activity, especially as we move to Q4, people taking advantage of both the depreciation, accelerated depreciation rules in the US, and just the fact that aircraft are available, OEMs are ready to deliver. In some cases, customers may have moved. They haven't canceled very many airplanes at all, but some of them have been moved out. So an airplane that had been fired up and ready to go and deliver this year is now suddenly available to a new client, meaning that maybe the customer who was attached to that airplane and bought the airplane, if you like, that delivery position, they've asked the OEM, hey, can I move it to next year? So that's created some near-term opportunities, and we're going to see a pretty strong Q4. We're in the middle of course, of Q4. We'll see the results here shortly, but we're pretty confident that we're going to end up around, call it 25 to 30%, but we think it'll be a little closer to 30% off this year. Now, that is what it is. I mean, the factories were slowed for many reasons back in Q1, Q2, obviously with the pandemic onset. Okay, book to bill, which is really the balance of orders coming in and deliveries going out the door. A book to bill of a 1.0 is considered pretty much, sort of an equilibrium, if you like, for a factory or operation. In this case, so the big five, I call them the big five OEMs. So you see the relative performance. We went back in time here, back to look at where we were as an industry after and in the middle of the last crisis. Look where we are today. There is no comparison. This industry is robust. We're doing much better than we were. I think the OEMs have taken very prudent decisions on production rates this year. We just saw the 29% reduction. That helps, of course, these ratios. So getting smart and getting quick around decisions regarding production rates earlier this year is really helping sustain some of these numbers. Now, in some cases, we don't have good data, so we've had to either do a bit of estimating here, and in one or two cases, we don't have data yet at all for various reasons on reporting. But generally speaking, an OEM that's doing at around 1.0 book to bill, and we see a few of them in particular. Look at last year, all of the OEMs essentially met that criteria. That's good performance. This year starts out in a bad way, but I think we're seeing good recovery. Backlogs, order backlogs. Think of this as kind of the confidence that you can have that you've set your production rates and that they're sustainable over time. Now, backlogs have generally been declining in our industry for the last 10 years, since really that very hard cancellation period in late 08 and certainly right through 09. Okay, a lot of cancellations. The chart doesn't go all the way back that far, but you can see where we've been as an industry, a slowly declining backlog. This is the big five. These are based on US dollar equivalent list prices in most cases, but especially out here. But generally, these are as reported. What we saw finally in 2019 was an improvement in the backlog situation across the industry, where we, these big five, if you like, 33 billion of backlog, give or take. This year, we've seen a decline so far. This is based on some estimates, mostly hard data right out of the OEMs themselves, but we're off about 14 points this year. How's that going to end? Well, we don't know quite yet, but we're actually hopeful that backlogs are going to start filling up as we move into this last few days of the year. Okay, we're going to switch gears here now, just a time check. We're at around 20 minutes past. I'll speak for a few more minutes on our survey. We're now going to talk about our survey results, and you can see up here our metrics board, the number of respondents that we have to our worldwide surveys. These are invitation only and password protected. They're also password linked to our JETNET system. So that has all kinds of important ramifications, but essentially it helps the respondents not have to give all kinds of fleet and other type of detailed information. We already have that in our JETNET system linked to the password. So we can get right into the meat and potatoes, if you like, with our survey respondents and ask them the questions. The survey distribution, if you like, it looks exactly like the world fleet. So that's very helpful. We now have over 20,000 respondents from 135 countries. And I'll tell you, no one else is doing this type of work in the industry. And we're happy to bring you some of these latest results. I think if there's one thing we can say, and there's one thing to take away from this press conference, it's this chart. Now, what are we looking at? This is what we call the market sentiment. This comes from the owner and operator community. This is the voice of the customer. There is nothing more clear to us than this one thing that they tell us. We ask, how are things? Are they getting better? Are they getting worse? Is our industry on the up or on the down? And the range of responses, it goes from -100 to +100. That's the range. Okay, so anything going up in this chart is a positive development. The overall community, this is all respondents worldwide, is telling us, here's where it was, here's where we've been. In Q2 of 2020, which was of course the onset of the pandemic, had just occurred. It was declared by the WHO on March 12, I believe. So just weeks later, our survey started gathering information from the community. And they were feeling pretty lousy, actually. No surprise there. And we recorded the lowest ever sentiment that we'd seen. Put this in some perspective. Back in Q2 of 2018, you see it over here in the box. This chart, if I had the data all the way back here, would be at +55 with a upscale up to 100, +100. So we were at +55. We dropped to -43 in 8 quarters, I guess 8 quarters. The good news is we've seen a rebound. We saw the rebound in Q3. Now look at this. This is our Q4 survey. This survey is not completed, but we have gathered, I think, 330 responses on our way to 500. We always try to gather 500 responses from at least 50 countries to give us good statistical clarity, but also low sampling error. Look at this. Now, you see the green line here. This is Q4, our Q4 survey, and we looked at the data before and after November 9. Now, the number of responses on either side of this line is about 150, 160 on either side of the line. So these are actually, again, well-balanced numbers. Look at these. The sentiment of the community before November 9, which was the announcement of Pfizer and BioNTech that they had come up with some very good early results, greater than 90% efficacy in their vaccines. And then we see here, again, a worldwide number, the mood has been improving. So now we're at 28.1, just splitting these data into 2. Very interesting development. Now, I mentioned early on, the US was 60% of the market, 61 or 2, depending on what segment of the market you're looking at. So the US is a key player in any of these numbers. All the US respondents make up around 60% of our base, as you know. Now look at the same optimism, if you like, US versus non-US respondents. And again, we'll share the results with you before and after the November 9 announcement from BioNTech and Pfizer. And look at these numbers. The US, again, sort of flattening out, if you like. Obviously, there was something else going on in the US, a very contentious presidential election, all of that going on right in this time frame. So the mood is sort of hovering here, but at least it's up from Q3, as you can see. But look at the non-US numbers. This is a step change really in the mood of the market we're seeing outside the US. So some pretty important improvements here. We're tracking that and we'll continue to report. Now, some more details. I'll go through this fairly quickly, but we're seeing some pretty nice sentiment in terms of what people think about utilization going forward. This is from our Q3 survey, very recent data. The statement is, we believe our usage is going to return to pre-COVID levels, let's say within the next 12 months. What do you think about that? Blue means yes, and dark blue means very much a yes, strongly agree. So again, the US or North America, which is Canada and the US, has been looking more optimistic about recovery and utilization, much less so in other parts of the world, as you probably see here. What are some of the concerns, the passenger or customer concerns? The people who are actually in the back of the airplane who are either paying for the flight, paying for the plane, or paying for the whole company. Who knows what they're doing? But the people at the back, we asked the question really regarding what are some of the concerns people are having. Again, this is from our Q3 survey, so lots of fresh insights. And this is interesting, cleaning procedures between flights. So if you're operating a charter or fractional program or even a private flight operation, Part 91 in the US, for example, that type of operation, cleaning procedures between flights is the #1 concern. That variable would not have been on this screen a year ago had I shared any of this with you. So what's going on? Obviously, we have COVID. We're in the COVID era, but you know, things have changed. Some things haven't changed though, and that's the cost of the flight. That's the other big concern. So as people get really excited about, hey, you know, business aviation is going to take off, and everybody's going to crowd our airplanes in biz av going forward. Well, maybe, probably not. Why? We need to work on topics like this. What's the cost of producing a seat in our industry, or a seat mile? The cost of the flight is still a very fundamental concern. Nothing changes there. I think this is interesting, this one here, the virtual versus face-to-face meetings. We're asking opinions of the owner-operator community. What are we looking at here? We're looking at, the statement as you see is here. We're finding Zoom, here we're on Zoom right now. We're finding that Zoom virtual meetings are very effective replacements for face-to-face. We're asking the owner-operator community here, interesting. And anything blue means yeah, and if it's dark blue, it means strongly yes, okay? So the interesting thing is when you compare by geography of our respondents, where are they based? So in Europe and rest of world, you look at some of these dark blue numbers. This is interesting because this is actually the owner-operator community. These are people who fly in and fly business airplanes around the world. So Latin America, look at some of these numbers. Virtual meetings are a real benefit, and we're seeing it here at VBACE. So this, I don't think goes away. We need to think about how this factors into our forecast of demand going forward, because clearly this is a good way to meet, right? Here's another thing that we're watching very carefully, purchase intentions of business aircraft. Here we are in we call it post-COVID, but I mean, after COVID-19, and who knows when that's going to occur really, once we get this vaccine and distribution, but we asked people in the owner-operator community, what do you think about the intentions of people to buy certain classes of aircraft? Now, by small jets here, we refer to everything up to a Part 23 light jet, like a PC-24, all the way up to that class. Medium jets are like Latitude up to Challenger 350. Large jets, everything above that. Now, if you compare these pies, and you have to stare at some of these numbers, the owner-operator community is telling us that the small jet business is kind of the place to be for the next little while. As you see, the dark blue here means, you know what, this area is going to increase in sales relative to maybe a decrease. So comparing these dark and light segments is really what we're looking at. And it seems that the community is telling us that, you know what, as we move up into the higher categories of aircraft, there's going to be more of an impact on sales. We'll see. This could just be reflecting the obviously the pandemic quarantining and restrictions on international travel, which really impact more of the big airplanes. So we'll watch this. We'll continue to ask this question and we'll get more detail. But the early indications are the small jet, light jets up through that class 10, $12 million and below on a new airplane. That's a good place to be right now. That's what the community is telling us. Some of the airplanes that are of most interest, this may be of interest to any of you out there, it sure is to us. Some of the aircraft that are of most interest to the community, we're asking, hey, what's the most likely next airplane? What's that one airplane you're thinking of buying next? And you can see them up here. This is what the community, over the last 4 quarters, so this is over 2,000 respondents. And if you think of it, there's only just over 20,000 companies out there that fly business aircraft in the world. So we've got around a 10% sample size here. This is a very clear signal as to the sorts of airplanes that are of interest around the community. I think what's to me fascinating is finally, maybe after years, the lower end of the category, certainly Pilatus, Embraer, Cessna, you see some of these aircraft. These are aircraft that are seemingly in demand now for new aircraft. Also, I think I want to point out some of the brand new aircraft that are coming, the Praetor, of course, the Global 7500, and of course the G700 from Gulfstream. There seems to be interest in this class of aircraft. Here's our current forecast. This is prepared for Q3, our Q3 2020 report. We are predicting, as I mentioned earlier, a 29% or so drop in deliveries this year. This is a so-called sand chart. Our overall forecast is for around 6,400 business jets to be delivered over a 10-year time frame, just over $200 billion US current, that's 2020 dollars of delivery value. That's for new airplanes. We've been very accurate in our forecast. We've been highlighted for that, and this is our current outlook. Now, some people are saying, well, that seems like a long, slow recovery. Well, in fact, we've been through this before. We've been to this rodeo before. When OEMs and supply chains slow down, to ramp back up it's a challenge. You've got to get not just your immediate and large suppliers, you got to get the whole supply chain back up. So we'll see. In terms of the dollars and the units, this is our forecast for how that's all going to play out over the next 10 years. We update these forecasts 4 times a year, and so that's out there for you. Okay, again, you can study all of this data in your leisure. I'll just go to, I think this is something I want to share with you. It's the last slide, really. If you're not aware, back in April, just after the pandemic was announced, we started something called JETNET IQ Pulse. It's complimentary. It's around 10, 12-page report on the industry. You can just go out to JETNET.com, IQ Pulse, or just Google JETNET IQ Pulse, and you'll find these reports. There'll be a new one coming out tomorrow, December 3rd. It's going to reflect some of the information you just saw. And like I said, they're there for you. They're complimentary. And we hope you find something of interest there. If you'd like a copy of this presentation, please just reach out to me, and here's the information here. My email address is there. Okay, what I'm going to do now is open it up for questions. Jason, are you with us? Are we seeing any questions come up? If anyone has a question, please let me know. Okay, I'm just looking at some of the chat questions that have come across. One of them is saying, can you send me a recording of this video? As I mentioned early on, we are recording the video of this press conference, so we can send that to you. I have a question here, Dean Roberts from Rolls-Royce. Has COVID-19 significantly changed your view on a supersonic business jet market? Has COVID-19 significantly changed your view on a supersonic business jet market? Okay, good question, Dean. If you're listening, I'm sure you are. As you may know, we are very bullish on that segment. The supersonic business jet is coming to our industry. This is something that forecasters have been saying for a while, but we've actually done quite a bit of research on this topic. This is an airplane that is, I'd say, there's almost an insatiable demand and interest in this class like we've not seen before. We think we'll be deferring. We have deferred actually our forecast for initial deliveries of an aircraft. We think that it's coming for sure in the 10-year period, but it's very much towards the latter part of that forecast. So we've deferred our EIS, entry in service of the aircraft, initial aircraft. We think there'll be probably 3 models actually developed by 3 different manufacturers that are going to be successful over time, but that's going to take some time. The environmental rules are clearly the key hurdle. Nothing surprising about that. But in terms of the demand, I get this question all the time. Is there demand? We have never seen an airplane that we've tested, and we do a lot of product testing for the OEMs and engine companies. We've never seen more interest and excitement around an airplane as we have for the last 15 years on a supersonic airplane. So first mover advantage, and for those who are developing the aircraft, and I know some of them very well, there's a tremendous first mover advantage. We welcome you to bring that airplane forward because there's going to be a lot of interest in buying activity. Okay, getting another question here. Why is the vaccine good news for the business jet market? Doesn't mean new customers over the past 6 to 9 months go back to flying first in business class? Or does the positive economic impact from a vaccine override this by spurring corporate demand for biz jets? I think we have to look at the vaccine in terms of what it does much more broadly than our industry. Yeah, for sure, we're going to see a rebound in commercial flight activity. I mean, I personally have only flown once in the last, since February, just once. And that, you know, I think we all, if we've done any flying, it's a different world, of course. So I think, you know, getting a vaccine is just going to do so many other good things for our economy and our confidence as a society across all international boundaries. So to me, that's the way I look on that, as opposed to, is it going to affect commercial or biz app? It's, let's hope all sectors come back, because commercial, at least a lot of people I know and work with in our industry, we completely rely on commercial airline activity to get us to meetings, to get us to conferences like BACE. I always go to BACE on a commercial airplane. And I want them to succeed. We need to move crews and parts and technicians around. So I'm, you know, I don't see it as us versus them. I see it as all boats rising with the COVID vaccines. And there won't be one. I'm thankful we're already seeing at least 3 or 4, or many more coming. It'll be a worldwide phenomenon. Hope I answered that question. Any read on the commercial defection percentage to flight? Karen Person asking. Hey, Karen. Commercial defection percentages to private flight. That's an interesting question. Are we going to start seeing people moving from commercial to, we're seeing that for sure. I mean, it's anecdotal. We're not getting a lot of hard data on this, but when we do ask our community of owners and operators, we're seeing an increase in the number of people on business airplanes. It's gone up probably 1 person, gone from a 3 to 4 kind of thing. We're still not heavily loaded on our airplanes, but I think we're seeing a little bit more packing of the aircraft on average. In particular for charter flying, that's where we're seeing the shift. You know, JetBlue might not get you to Florida, but you can certainly get there on a private airplane. And we're seeing that. We're seeing it as, you know, as families gather, as people move to their 2nd and 3rd and 4th homes. That's where the traffic is shifting from commercial. As commercial comes back up, you know, there may be a 25% in some communities, 40% in others. As that gets back up, we're going to see people shift and do what they do normally, which is evaluate every flight. Am I going to fly private? I'm going to fly on commercial. It's not either or, it's a mix. I know people who are very, very, very successful, uber high net worth, who fly on commercial airlines all the time. It's just the right thing to do for certain missions. I hope I answered that, Karen. Adrian LeBeau, Pratt & Whitney, will the downturn result in some fleet rationalization and accelerated disappearance of some models from production? Interesting. So basically, the acceleration of retirements and removals from service, that is our forecast. Primarily, that's driven, Adrian, by the aging of the aircraft fleet. We're seeing, and we're going to see this over the next 10 years, flight activity on a per airplane basis is probably going to stay kind of subdued. Why? Because the airplanes are aging, and we have a lot of MRO shops and you know, OEM aftermarket shops that are doing a good job keeping the airplanes in the air. But as they age, there's less utilization, less training facilities or courses even around them to keep them. Parts are a little tougher to get. So we're going to see overall that you know, airplanes, we're going to see an increase in retirements, we think. The fleet, if you go back to late 70s, early 80s, that sort of, you know, pig in the python kind of thing, if you look at a chart, that group of aircraft is now, what, 40 years old, is going to be 50 years old if they keep flying. And that's really a time when we start seeing aircraft really removed from service. Now, we're seeing also some encouraging signs of people saying, hey, look, you know, I want to buy that classic airplane, keep it flying. It may have 3 more years in it economic life before some major event, you know, landing gear or some structural, you know, wing demate or something big has to happen that really makes that an uneconomic airplane. So I think the COVID pandemic will accelerate those kinds of decisions to keep airplanes active, at least for a little while. But then I think we see a drop off. I hope I answered your question. It sounds like it's a good time to be Pilatus. Well, yeah, I mean, if you're developing quality airplanes and you've done a good job keeping your customers happy, it's a good time to be in our business. We track customer satisfaction by OEM. If they have, airplane X or Y or Z, we've got really good detailed data on customer satisfaction. First year of service, AOG responsiveness, expectations versus reality, quality of the brand, quality of the aircraft. So we have a lot of details on that. And frankly, yeah, Pilatus does very well amongst others, but they're doing particularly well. If you like, keeping to the knitting is kind of one of the things that some companies do, kind of like we do. We don't do everything, but we do something very well, and people recognize us for it. So I think that's the case with that OEM in particular. Another question. In the small jet market, why does the light jet market forecast show increasing demand, whereas VLJ segment remains depressed? That's someone looking detail into the SAN chart that I produced before. It's a good question. I think some of that depends on what you think is going to happen, and what we think is going to happen is driving that chart. We think there's going to be some migration from VLJ aircraft up into the light jet segment. So current manufacturers of VLJs, we know, are looking at developing next gen aircraft that are going to be bigger, larger. Typically, that's what happens is the OEs move up rather than down. It's not always the case, but in some cases, that's what's going on in that segment, at least in our thinking, is that current VLJ demand, we think, is going to shift into something maybe a little bit more comfortable cabins, a little bit longer range. After years of speculation that ADS-B might force the retirement of older aircraft, with the deadline come and gone, do we have an answer? Did we see any retirements of aircraft due to the ADS-B requirement? That's a question from David. And I'm not sure I have all of the hard answer on that, David, but I believe, yeah, we did see quite a bit of activity towards the end of last year. A lot of aircraft did not make that deadline, as you know. And if there's anything good that came out of the pandemic, maybe it was that it sort of shielded those aircraft that were grounded anyway. So we think that it's given some respite to that, on the ground fleet. Probably makes it look, it's a little bit harder to tell for sure, but a lot of aircraft have been parked. So there's a lot of capacity in our industry to pick up demand as it comes in. Some of that is going to require the ADS-B out capability. Towards the end of last year, yeah, in the US fleet, it was still a bunch of, I think it was 20% of the fleet towards the end was still not really up to scratch. So we'll see. I don't have hard data on that. We'll continue to monitor. Ernie Arvi is asking, do you anticipate that the new folks to private aviation will continue to fly privately post-pandemic? And what is your projection on what percentage might continue to fly privately? I think, Ernie, that's the key question is we are seeing prospects coming to BizAv for the first time. The good news is our image is strong. That continues. We are a solutions provider. We provide such benefits to families, to individuals, to organizations that need to move people at this crazy time. So some of them are going to stick with BizAv. I think the key thing, and we saw it on one of those earlier slides, Ernie, was the economics of our industry. I'm really, really bullish on our industry, but I'm also hopeful that we can find some business models where we get higher utilization out of our assets, out of our aircraft for sure, but out of all of our assets, our people, our systems. We need to find ways to more economically operate such that we can lower the cost of generating I'm sorry, I come from the airline world way back, but an airline seat mile is what, focuses the mind. Our segment of the industry doesn't think of that or as much. So fleet operators, we're very bullish on charter. We're very bullish on fractional. We're very bullish on people sharing airplanes going forward. But it's going to require hopefully some new business models that really help to drive costs down. Do I have a number? We'll talk offline, but I don't think it's something that we have right now. Okay, we're coming right up to the top of the 45-minute run. If you have any other questions, please type them in on the chat and we'll try to take them. I hope this has been informative. I'm going to go back one slide here, if I may, if I can, just to share with you. Oh gosh, no, I guess I don't have it. Okay, click the wrong button. I hope that this has been informative for you. If you need or would like the presentation copied, just email me at Rollie, R-O-L-L-I-E, at JETNET, JETNET.com, and we'll get that to you here very shortly. I just want to say thank you to all of you for your participation. We had a really good turnout, lots of questions on the chat, and we're glad to be with you. So if there's no other questions, I'm just going to wish you a great day, a great conference. Thanks to NBAA for setting this up. Virtual is not face-to-face, but it works pretty well. So thanks to NBAA. So everyone have a great show, a great day. Good to see you again.